Hello and welcome everyone to another edition of MHQ's Foundation 101 webcast, where today, we are talking foundation and UAE corporate tax. Yes, in a historical moment, the UAE has announced the introduction of a federal corporate tax on what is defined as business profits from June 2023. While it was expected, we wanted to showcase a little bit what this will mean for not businesses per se, but more for family holding and foundation. And for that, I have Kerti joining me. Kerti, good morning.
Good morning, Jan.
And really what we want to do here while we are waiting for the official text of the corporate tax law is to go into some of these initial questions that our clients already have and people that are considering structuring or restructuring. Should I wait? Should I do it now? So hopefully this webcast shine a light on what is to be expected, particularly for passive income and passive family holding structure. So let's jump into this, shall we? The new regulations are applicable from 1st of January 2023. So maybe as a reminder for those of us that are not familiar with the UAE, what is the situation before that?
So currently UAE has no federal corporate tax. There is, however, emirate level corporate taxation, which is applicable to oil and gas industries and branches of foreign banks. So this means foundations and holding companies currently are not subject to corporate taxation. They are not required to submit any tax returns.
Okay, and what is the anticipated tax regime which will apply after June 2023?
So UAE businesses will be charged a corporate tax starting for the financial years starting from 1st June 2023. UAE has an internationally competitive tax regime with the lowest 9% headline tax rate, incentives for free zone businesses, for foreign tax credits, and no withholding taxes. Yep. However, all businesses will be required to register once and submit annual returns to the tax authority.
So this is already a huge change, because even if you are a passive holding structure, my understanding is that everyone will actually need to register and report on an annual basis. Good work for accountancy firms, as it turned out. So let's see, you mentioned corporate tax. How is corporate tax today being defined? What is our understanding?
So corporate tax is a form of a direct tax, and it is levied on net business profits. So these net profits can be defined as profits as per your financial statements plus or minus any adjustments. These adjustments are yet to be defined in the corporate tax law.
Okay, and whenever we talk about corporate taxation, usually we talk about rate. Do we already have an idea of what these rate or rates should be?
Yes. So 0% tax rate on the taxable profits up to 375,000, 9% statutory rate on the profits above 375,000.
Okay, and presumably the large multinational will be treated differently following the Pillar 2 of BEPS, right?
Yes, as a support to Pillar 2 of BEPS, UAE has proposed a different tax rate for large multinationals. And these mean those multinationals that have consolidated global revenues of 750 million euros and above.
So that's not really relevant for our topic when we talk about family holding structures. So which brings me neatly to who is subject to corporate tax in the UAE.
So all businesses and corporate commercial activities in the UAE will be subject to corporate tax, but also individuals who earn business income from a commercial license will also be subject to corporate taxation.
Okay, so as we know, foundations and most holding structures are registered in free zone. What is the inclusion or exclusion of free zones with this?
It depends on the commercial model. Free zone businesses will be subject to corporate income tax. However, they will be given tax incentives provided they comply with the regulatory requirements and they do not conduct any business with UAE mainland.
And I think that will be the key factor is what are these exemptions? Will one have to pay and then recoup, or will this be straight up exempted depending on the model chosen? This will be fascinating to follow. So this is a good time to ask you what will be exempt from corporate tax as we anticipate.
Yes, more relevantly, dividends and capital gains earned by the UAE from qualified shareholdings will be exempt. Then also individual salary and other employment income, intra-group transactions, reorganizations, and revenue from extraction of natural resources that is already subject to emirate level corporate taxation and hence will be exempt from corporate income tax.
You mentioned qualifying shareholdings. Can you elaborate on this a little bit more? Because I venture to guess that this will be super topical.
Yes, indeed. So a qualifying shareholding refers to an ownership interest in a UAE company or a foreign company that meets certain conditions to be specified in the corporate tax law. However, we believe that these conditions are likely to be around minimum ownership percentage and the minimum ownership holding period.
Okay. And let's go back then to the family holding structures and foundation team. What impact do we expect on these structures tomorrow when the law comes in?
So foundations are holding structures that holds assets and receives passive income such as dividends will be exempt from corporate tax. But those hold real estate and earn rental income will be taxable, and any other income that is not passive income is expected to be subject to corporate taxation.
Okay, and you touched on the real estate revenue. This is clearly a key asset class that we see consolidated under the IFC and ADGM holding. How do you perceive this? Because do you think it will be tackled specifically, granularly by the government with some specific exemption? How do you see that?
We expect this to be reported at a granular level. So the revenue, net taxable profits will be reported to the authority along with the exemptions and any tax incentives that you have already availed. So at the outset, the net taxable tax payable along with the tax incentives you have claimed will have to be reported to the authority and to be paid annually.
So this brings me neatly to the reporting obligations, which will become new for everyone. So can you touch a little bit on that, on how this is calculated and what do we expect as part of the self-assessment and the reporting?
So the reporting will be made annually. We expect there will be schedules of computation of tax payable and net tax, and we will have to follow the reporting mechanism on an annual basis.
And whenever a new law comes, and this time for a change, we have a substantial heads up. So what would you recommend business operators, but also family holding structure to do in the meantime in terms of prep?
So so we have, as you said earlier, it is applicable from 1st June 2023. We have year and a half to prepare. So we should understand what is taxable and what is exempt. Also understand the legal structure, business model, and capital structure for rationalization. Yep. Understand your compliance obligations under this law, and also see if you have adequate bookkeeping. And if the books of accounts follow accounting standards, internationally accepted accounting standards, and the documentation you have right now, is it adequate for justifications to the tax authorities?
And as we know, most family structures are often embedded in the business, but not necessarily following the same standards. So this is likely to have to change a little bit more professionalization in holdings and investment structure, which I view actually for the better, because a lot of people want to navigate towards a single family office or a more sophisticated structure. So the implementation of these tax regulation will actually force them to accelerate this process. So with this in mind, it's actually it works for the greater good. So that's great. Thanks a lot, Kerti, for these clarification initial. We expect, of course, further announcement in the law release shortly. So we'll probably do a small follow-up the moment the law is out. But in the meantime, if you have any question and you want to kick the tires on self-assessment and checking what are the expected consequences on your business, on your holding, Kerti and her team are on hand to assist. And otherwise, we'll see you next week for something exciting and reasonably related is the release of MHQ's new comparison chart on single family office in the UAE, which jurisdiction, which tools. Quite exciting to release this and very timely. So Kerti, once again, thank you very much and good day ahead. Bye-bye.
Thanks, everyone.